Hi, Howard Deal here with the General Agency, and today I will be covering what is a deductible and coinsurance as it relates to health insurance. So the first thing, before you end up here, it's important to know how your health plan works, and part of that health plan is your deductible and coinsurance. Okay, to make this a little bit easier to understand, I've color-coded the boxes in this video, red, yellow, and green. Red is going to be your money. Yellow is going to be use caution because it could cost you. And green is going to be the insurance company's money. So this is an example of a deductible, and this assumes that your facilities and providers are in network. And if you notice the yellow writing there, it says use caution when using non-network providers and facilities. You could have a separate deductible coinsurance, maximum out-of-pocket, and usual, reasonable, and customary charges. Now, usual, reasonable, and customary charges, I'll cover that in another video. So stand by for that one. Okay, so let's say that you've gone to the hospital and had a procedure done and your bill is $40,000. Your deductible is $2,500 on your health plan. As you notice the red, that's the money that you pay. So you pay the first $2,500 of your bill, and that leaves a remaining balance of $37,500 that you now owe the facility and providers. After you've paid your deductible, the next thing that kicks in is your coinsurance. If you notice the green, most of the plans, for example, PPO plans are 80-20. Your plan may vary, so make sure you check your plan details. But in this example, we'll use an 80-20. So the insurance company at this point is going to pay 80% of the expenses, and you will pay 20% of the expenses. So you'll be paying 20% of that $37,500. Okay, so now your outstanding bill is $37,500. That's what you now owe the facility and providers. If your insurance policy is an 80-20 policy, the insurance company is going to pay 80% of the $37,500, and you'll pay 20%. Which means the insurance company is going to pay $30,000 and you will pay $7,500 of the bill. Now, if your insurance policy has a $6,000 maximum out of pocket, this is just an example, your policy is going to vary, but if your maximum out of pocket was only $6,000, you would only be out of pocket $6,000 and not the $7,500. That max out of pocket is very important when you're shopping for health plans. That actually limits your exposure, and that is an annual max out of pocket on most policies. So December 31st, that maximum out of pocket deductible and coinsurance is all going to start again. So that maximum out of pocket is $6,000. We do offer gap plans that can cover that expense. A lot of people don't have $6,000 to be out of pocket. If you are an employer or your employer is generous enough to offer a gap plan, and we do provide those, and our gap plans can be written up to a $10,000 maximum. So if you're one of those people that thinks you need a gap plan, be sure and give us a call. And also watch for our video on the gap plans, and it'll explain exactly how the gap plans work. Now, also keep in mind, if your plan has non-network benefits, see our video on the non-network benefits before you have a procedure. It's very important because you could be exposed to additional deductibles, coinsurance, and usual, reasonable, and customary charges that I'll cover again in another video. So once again, my name is Howard Deal, and if you have any questions, feel free to give us a call at the General Agency. Our number here is 972-466-2915, and thank you very much for watching. Remember to subscribe to our channel, and we'll see you soon.